chipmaker Micron getting slammed after hours following its earnings report after the bell. Josh Lipton's in San Francisco with all the details and what Wall Street is saying about the results. Josh.
So, Melissa, I checked in with a couple analysts on the actual print. I'll bring you those comments. Rosenblatt's Hans Mosesman saying, okay, quarter, not as bad as feared. Top line at lower end of range. Non-GAAP EPS, a slight beat off of a higher OPEX. Stifel's Kevin Cassidy saying results roughly in line with pre-announced expectations. $1.8 billion out of $10 billion share repurchase shows a good start, he told me. Potential for accelerating repurchases if shares trade lower. Importantly, though, Melissa, I checked in with both those guys before the call, which is when we got this guidance that really undershot what the street had been looking for. So Q2, Micron is saying to expect EPS here of about $1.75. The street was at $2.44. Revenue also really missing here. They're saying to look for between $5.7 billion and $6.3 billion. The street had modeled $7.3 billion. Really, the executives on the call here talking about a near-term outlook that they call more challenging. They talk about weaker demand, specifically, just for example, data center. They say they're seeing reduced revenue. They expected that headwind to persist for a couple quarters, seeing cloud customers go through a period of digestion, in their words. Graphics also revenue headwinds that they think are going to continue for a couple quarters here. Check out the SMH, though, Melissa, because it's not just Micron. Look at the chips generally, that chip ETF. Even at the close today, it was down about 20% from its recent high. You can see it head lower now here in the after hours. It was interesting because I had a recent chat with Susquehanna's Mehdi Hosseini, who had actually gone to Asia recently. He had checked in with his really assemblers there, manufacturers, distributors, and he said he was expecting more near-term pressure here because of this very demand weakness we're now hearing about from Micron in these markets, PCs, smartphones, cloud infrastructure. And when I talked to Mehdi, he really thought you had about maybe 10% more downside risk to this sector before all this bad news, in his opinion, was really priced in. Melissa, back to you.
All right, Josh, thank you. Josh Lipton in San Francisco. Josh had mentioned the action in the after hours on the SMH, and look at WDC, Western Dig, that's down by more than 2%, specifically in the same area, but also NVIDIA is down, Texas Instruments, Cypress Semi, so it's all
and Tim's been correct over the last week or so. Semis actually had been, until this, had been trading pretty well, giving you hope, at least some optimism for this quarter. Guidance is a disaster. Now, in the spring, Micron announced a $10 billion buyback. And I remember saying on the show, you know what? That's Micron telling us that they're no longer cyclical. They're getting away from being a commoditized business. And for about a month and a half, it looked like we were geniuses. And then that turned pretty quickly. That buyback turned out to be a disaster. Guidance is, people have been buying this on valuation. Well, guess what? It actually probably just got more expensive on the way down, which is interesting.
You know what's really weird, really quick, is that I think we all make it a lot more difficult. I know that I do, than it really is. If you look at DRAM, you put up a chart, thank you.
I wasn't sure what you're talking about. Just
everything. Just fill in the blank. So if you put up a chart on DRAM and then you overlay it with Micron, from March, DRAM prices have been down 40%. Micron's down about 43%.
Commodity producer, basically.
Yeah, and that's the defense against maybe this isn't the ultimate cyclical tell, because on some level, I think the software part of all of this is something to be a little bit more concerned about, too. Businesses tend to use software to lower prices and become more efficient. They also, one way to lower CapEx and OpEx is to stop buying software. So, I mean, I think it's something that at least it's been an incredible cycle for software.
Yeah, I mean, just there's nothing good about this earnings report. And we're going to have Todd talk a little about technicals, but 33.5, big level for Micron, breaking through that. So now I've got deteriorating fundamentals and a technical break. That's no place that BK wants to be.
We'll see what Todd says about the technical break. For more instant analysis to Micron earnings and the entire chip space, let's go off the charts with Todd Gordon of TradingAnalysis.com at the Plasma. Todd.
Hey, Melissa, BK, I got some lower levels for you. But first, let's talk about the earnings. Micron, nothing good here, down 7.48%. Trading 31.56 after hours. I'll tell you, the loss of 33 from a technical point of view is no good. I do see lower levels here. Options markets were expecting a move down to about $31 heading into earnings for tomorrow's trade. So if we exceed the 31 level, again, look for additional selling. So as we get off the intraday kind of earnings reaction chart, let's get into it. You guys were talking about how much of a commoditized space chips are. I think with some charts, long-term monthly charts, we could just put it into context just how kind of rhythmical and patterned these really are. So this is Micron all the way back in the monthly chart here. What you'll see is there's two significant declines in MU, 67%, 74%. You take the average, call it 70%. if we're in fact in a 70% decline, which has happened twice before in the past, we have further to go. Right now, as of the close of business today, we're down 49%. So obviously another 20% on the downside. Let's go from this chart down to, actually, it's going to be a monthly again, but we're going to put a little bit more details behind this. Okay. A 70% decline, like we've seen here in here, puts you, BK, at about $20. And I hate to say it, but it also corresponds perfectly with this uptrend support. You can't make this kind of stuff up. When there's so much pattern and such a technical level that comes together, I feel the market attracts to it. It's quite a drop, but this is certainly within realm of reasonable expectations. Back to the SMH, you're going to see that rhythmical kind of decline that we've seen twice on the monthly chart is nowhere near severe, obviously, is in the holders as it is in Micron. But what we've seen in those two declines are 29%, 27%. So far, SMH has done 24%. So it's within reason. Another 3% lower will get you to about $83. We just broke that 90 level after hours on the back of Micron. So again, that's about $75 to $83. I was kind of going back and forth with Dan Nathan on this. I was bullish semis. He was right. We really need to hold that 83 and then 75 is that uptrend support there. If you break this, you're going to overbalance those prior corrections. That's when a correction turns into something more. So we have a little bit lower to go, but if it keeps going, that's a problem.
Okay, so more pain ahead, especially for Micron. Want to also talk about that Amazon call that you made last week. I mean, it dropped jaws here. You said that Amazon could sink, what, to $800 or so? Where do we stand now that we are practically at February lows on the S&P 500?
Yeah, again, there's a huge asterisk on that call. I'm not saying Amazon breaks 1,000. If this market does not hold up, some of the symmetry we talked about in the chips, we're seeing different sectors start to break down. If 24.5 goes, 2450 S&P brings 21. If the overall market does melt down, here's where support comes in Amazon. I made this point on another segment on the CNBC. If you try to draw a trend line, okay, fine, we're going to be right there. What happens if this traditional trend line doesn't hold? Where do you derive support? So the way you calculate this is if you don't have anything on the downside, take the angle of ascent on the upside, Control C, copy paste, drop it below, and then you project up. This is a massive, massive rally from about $35 in Amazon to about $2,050. Guys, that's a 5,800% rally in Amazon. What would you say if we did a 25% retracement of a 5,800% rally? I don't think that's out of the question. Again, that comes in right at lower channel support, and depending on the angle of attack, how fast we get down there, that's going to be possibly 900. And if we kind of just languor, we just kind of, this slow meltdown continues, it could be 800, it could be 700, depends on the angle of descent. But if this market is going to correct down to lower support, that is defined from the low of the credit crisis, those are the support levels we're looking at. I'm just being objective. I'm not trying to be sensationalistic.
Too late.
Thanks. I mean, he was like
just
that
trying
last
to trade
week, too.
what I see, not what I think. And that, for me, that serves us well in technicals.
To be clear, the asterisk is if the market melts down. So what is your definition of a market meltdown?
The way I'm playing it, Melissa, is 2150 is the equivalent uptrend channel in the S&P. At that point, then 1850 is the 2015 breakout. I mean, we obviously have that's 700 points lower in the S&P. As the way FANG is going, if we're including Amazon in that certainly, I think, looks within reason here.
Okay. Todd, thank you. Todd Gordon of TradingAnalysis.com. Mr. Sunshine today.
Wow.
What was that? Control-Alt-Delete space?
No, C for
C,
copy,
copy, paste.
guy. C stands for copy.
That's where I just dialed out. I mean, and Todd wasn't calling for Amazon. Let's just be clear. That wasn't his call. And I think he tried to make that clear. Again, I thought it was clear last time. Getting back to Micron quickly. It's going to be interesting to see. I mean, if you listen to what they said, high-end smartphones, a problem. What does that mean for Apple? Apple's probably lower in the aftermarket. I haven't looked. If Apple can somehow turn positive tomorrow, maybe that's at least a tell for Apple that all this news that we're seeing now in the Microns of the world is in the stock.
You know what's really interesting about his Amazon call? That if we erase all the S&P gain that Trump had from election night, we're back to 2,100 in the S&P. That's where you get your Amazon. And I think eventually, unfortunately, I think we're going to erase it.
You think we get to 2,100 on the other?
Yeah, I think eventually. This is not going to be a month-out call, but I think it'll be steeped in irony if we erase the entire Trump rally.
Well, what's great about technicals is that it takes the emotion out of trading, right? And so where you make most of your mistakes is you get too emotional, too caught up in anything. So you look at something like what Todd's saying, that's where support is. Whether you like it or not, that's where support is. But I think as Todd's point and to your point, Steve, it's going to be a while. A lot of things have to happen. And I would suggest you probably have to have a recession type of economic environment for that to happen.